Senator from Idaho, without objection, so ordered.
Thank you.
Senators recognized.
Thank you, Madam President. I'm coming to the floor today to thank Chairman Dodd for working with us on some important pieces of this legislation. Included in this legislation is the increased borrowing authority for both the FDIC and the NCUA so that they can immediately access the necessary resources to resolve failing banks and credit unions and provide timely protection to insured depositors. Earlier this year, Senator Dodd and I joined in introducing legislation that would increase the borrowing authority of the FDIC. And since that time, we've expanded that legislation to provide parallel authority for the NCUA for credit unions and to include an assumption in the budget resolution about the need to pass legislation to ensure that adequate resources are available to the FDIC and the NCUA. This legislation is similar to what is included in the Dodd-Shelby substitute that was passed by the Banking Committee by a voice vote in an amendment to the credit card legislation that we'll be looking at later on. And I come to the floor simply to make note of how important it is that we continue to pursue this legislation and to thank Senator Dodd for working so closely with me to make sure that it happens. When you look at today's economic climate and the threats facing us in the financial industry, we have to provide the necessary tools to our financial institution regulators so that they can protect us as best they can. And one important piece, and I'm glad to say one of those pieces about which there is very little controversy, is the need to make sure we strengthen the FDIC and the NCUA to make sure that they can undertake their statutory responsibilities in the context of failing institutions. I would be remiss if I didn't say that I wanted to be sure that both the FDIC and the NCUA were very careful in the exercise of these authorities to make sure that they don't do more harm than good and harm institutions that could otherwise have survived by stepping in. But when the true need comes, they need to have the authority. This language deals with significant reforms that need to be undertaken as soon as possible so that our regional banks don't face very significant increased levies and requirements for funding the FDIC and NCUA operations. It would permanently increase the Federal Deposit Insurance Corporation's borrowing authority from their current level of $30 billion to $100 billion, with additional authority that is temporary to allow them to get up to $500 billion in the case of emergency circumstances. It would permanently increase the borrowing authority of the NCUA from the current $100 million with authority for a temporary increase up to $30 billion. The temporary authority for both the FDIC and the NCUA could only be used if determined necessary by the FDIC Board of Directors, written recommendation in support of 2/3 vote, the Board of Governors of the Federal Reserve System with written recommendations and 2/3 vote, and the Secretary of the Treasury in consultation with the President. The FDIC and the NCUA need this access to sufficient resources to deal with the potential for failing institutions that we're facing in our country right now. Assets in the banking industry have increased since 1991 from $4.5 trillion to $13.6 trillion at the same time that no increases in this borrowing authority has been authorized. And the assets in the credit union industry have also significantly increased since their borrowing authority level was established. It's important to note that this borrowing authority is not coming from taxpayer dollars. The levies and the assessments that are made on the participants in the financial industry themselves, the depository institutions, are the source of the dollars that would cover this loan authority. And I think most people understand, but what happens in the case of a failing institution is that the FDIC steps in immediately and protects all depositors so that the depositors can have that assurance of the federal guarantee of their deposits in these depository protected institutions. And then the FDIC basically works out the resolution of the remaining assets of the failing institution, and the banking institution itself, other depositors, through their assessments, pay for the cost and operation of this program. We are simply increasing the borrowing authority to make sure that the FDIC and the NCUA have the resources necessary to deal with these very difficult and challenging times. In addition, the borrowing authority would allow the FDIC and the NCUA to lower their recent special assessments that went out to the banking and credit industry. In other words, this would allow us to kind of smooth out that process by which the depository institutions themselves fund this process and not create huge liquidity and financial pressures on the banks that are not facing the potential of any kind of FDIC intervention, but which are being looked to bear the cost of these problems as we move forward. The language ensures that the FDIC and the NCUA have the resources necessary to address future contingencies and to fulfill the government's commitment to protect America's depositors. And like I said at the outset, I want to be sure that the NCUA and the FDIC are very careful in the utilization of the authorities that we've given them. And there are some concerns already being raised about the fact that perhaps the stress tests and some of the other analysis that is being put into place and the evaluation of the solvency of our banks needs to be fine-tuned so that we do not unnecessarily utilize these authorities where a better resolution activities could have been pursued. But when it does become necessary, we need to be sure that our nation's depositors are protected. So once again, I thank Senator Dodd for his strong support of and work on this issue. Before I conclude, I want to make one other comment. There's another issue that I've been working on with Senator Dodd, and I want to make it clear that my comments, the frustration I'm going to share right now is not directed at him because he's been working very hard to address this same issue and trying to resolve it. But I do believe it needs to be said that there's another piece of the issue that we must resolve. Earlier, on previous legislation, language was included dealing with depository institutions that gave the FTC much broader jurisdiction than it should have had with regard to depository institutions. The language was intended to give broader jurisdiction and clarification of jurisdiction to the FTC's regulation of other non-depository institutions, but the way the wording in the bill was written, it included depository institutions wrongly. We identified that issue at the time. We stood here on this floor, a number of us senators stood here on this floor and pointed out that that was not intended by the bill and that we would correct it. And in fact, we said we would correct it at the first available opportunity. And now we are seeing opportunities arrive and we cannot reach conclusion with regard to the necessary correction of the legislation that gives unnecessary and confusing dual jurisdiction to the FTC now over depository institutions, which was not intended by this Congress and which will not be helpful in terms of creating a duplicate regulatory system that our depository institutions must deal with. And so I again stand on the floor and call for us to do what we agreed to do, which is to fix the FTC issue and make sure that we carefully clarify the jurisdiction of the appropriate committees and the jurisdiction of the appropriate regulators over depository institutions. And with that, Madam Chairman, I yield the floor.
Senator from Connecticut.
Madam President, before my colleague from Idaho leaves the floor, I want to thank him as well. He's a senior member of our committee, the Banking Committee, and has been an invaluable asset and partner in these issues. He understands regulatory reform as well as anyone and has dedicated a good part of his service on the committee to that issue. And so it was a pleasure to work with him on the issues that he's mentioned in this bill dealing with the FDIC and the National Credit Union Administration to provide the necessary resources. And I want to underscore his point as well. We're providing these resources. We think we've built in some pretty good safeguards so these matters will not be exceeded. But the best safeguard is for the institutions themselves to be cautious and prudent in utilization of these resources as well. And I underscore and endorse his comments on that point, and to thank him immensely for his work on the bill, making it possible for us to arrive at where we are, arrived this morning. And lastly, to join him as well in his concerns about the Federal Trade Commission issue here that we did, I thought, successfully resolved in the colloquies we had here. Unfortunately, that was not apparently the case. We're still working at this. I want you to know that Senator Crapo's office is directly involved with ours and others that we're negotiating with, and will obviously pursue this matter. I'm hopeful we can resolve it amicably, but if not, then there'll be in a moment here in the not-too-distant future, we'll come up and just have to vote. If that's the case, I prefer to try and work things out. Our satisfaction without that, but if it takes that, we'll do that. I join him. I think the jurisdiction is rather clear in this matter, and I believe most agree with us on that, but obviously, from time to time, you need to bring these matters to a head and actually have a decision by the body. Again, I hope we can avoid that, but if not, I will join him in that effort to provide that kind of legislative effort. But again, I thank him very, very much and look forward to this evening. Hopefully this evening we can complete work on this bill and send it off, and I'm hopeful the other body, which I'm told is looked on this, on our efforts here with approving eyes, and so we may be able to get it signed into law pretty quickly.
Thank you very much, Mr. Chairman. I look forward to working with you.